Hello, everyone, and thank you for joining me today. I wanted to take a quick moment to preview one of the most interesting and exciting indicators that I have seen in today's Forex market. This particular indicator focuses on a trader's ability to quickly understand and measure their risk reward ratio. This indicator was built and designed based on one of the courses I teach, and it's called The Business of Trading. To date, it is one of the most successful courses that I've taught. It is really designed to help the beginning and intermediate trader understand what they're doing in this business. Too often, I feel that the trading education industry just tends to focus or to skew their instruction towards getting in and out of a trade. After all, that's what most traders want to see. It's the quote unquote sexy part of trading, the buying and hitting the selling button and seeing all the lights flash. And this, of course, is what sells courses. This is, of course, what the people want to see. So, therefore, this is what many beginning and intermediate traders tend to get. However, in order to create wealth within this business we call trading, you have to understand risk, you have to respect risk, and you have to trade within certain boundaries. The focus of your trading should revolve around a trading plan, which revolves around the risk that you take day in and day out. So, to mirror my course or the sentiment within my course, The Business of Trading, this indicator was created to help traders understand immediately how much they're risking per trade and also where their targets are in every trade. So please sit back and watch the demo or the preview of this indicator, and I'm sure you'll find it just as interesting as I do. One of the best features of this indicator happens to be its simplicity. And when it came to the design of the indicator, when I sat down with the programmers, I wanted them to focus on two things: price action and support and resistance. And as we can see here, it's extremely simple. We have some brief text to the right, and we have a few dots to the left. Now, to the left hand side, we see swing points. And on the right, we see a custom entry line, we see a custom stop loss line, and some details in regard to where price happens to be now. So as we shift our custom stop loss line, we see that we're moving from a stop loss of 10 pips now to 13. We're seeing our risk level still stays at 2%, and at 2%, we're supposed to enter into 0.26 lots. We're still risking the same $39, and as we transition to swing point number 2, we're now only going to enter 14 or zero point 0.14 lots. And at the third swing point, the lot entry should be 0.12 or 0.11. And this still gives us the 2% risk on our account and only risking in this time $37. And as we transition back down to swing point number 2, as we can see, our stop loss is 26 pips, and that's the price. And as we transition to swing point number 1, we're now at 16 or 15 pips, and that's the price. Still only risking 2% at 0.25 lots. And here, down to the actual candle. If we're only going to risk one candle, we would actually enter 0.36 lots. This way, it helps us quickly identify the amount of lots we're supposed to use and still maintain the 2% risk, and understanding our risk reward ratio with our stop loss in relation to where our targets need to be. And wait, everyone, the great features don't stop there. In addition to automatically calculating your lot size, we have risk management and cost control key calculations. And in essence, what we've been able to do here is automatically calculate how much you've made at the end of the week, at the end of the month, at the end of the quarter, and also at the end of the year. Here we see the weekly gain so far has been $248. We see the monthly gain has been 117, and the reason for the difference today happens to be October 1st. So and it's a Wednesday, so it's only calculating today's gains. And as we transition, we see the quarterly gains. So the quarterly gains happen to be 4,291. And in each of these categories, we see the number of pips that have been won, we see the dollars that have been won, we see the average win size, we see the number of pips that have been lost, the dollars that have been lost, the average dollar loss, your winning percentage, and you're able to keep track of all of these things. And best yet, it goes away at the click of a button. One of the things that I wanted to do was to showcase the indicator on different time frames and also currency pairs. Here we have the 15-minute chart of the dollar CAD, and as we can see, transitioning our stop loss line from one swing point to the next, we still notice that the risk factor has not changed. The dollar amount at risk has not changed. However, the indicator gives us the quick math of what our lot size needs to be. And that is what's critical as you try to maintain the discipline of your risk factor, what's on your trading plan. It helps you in quickly identifying the math of the amount of lots that need to be risked. So in this instance, we see at the first swing point, you're risking 15 pips. Your lot size is 0.29, 2% at $39, first, second, and third targets. How often have you looked at a chart and didn't know whether the bulls or the bears were in charge? Well, this indicator is swift and nimble enough and simple enough to help you with your analysis. As we can look at this chart, we can make an argument for both sides. Initially, the bears are in control. We have follow through. We have swing points to the north, which we can use as our stop loss. However, if we feel that the bulls are now taking over the market, we can easily transition our custom entry, our custom stop loss, in order to look at where our risk factors would be at the various swing points for a long position. In the last example, we're looking at the euro dollar 5-minute, and scalpers, I haven't forgotten about you. Here we see a consolidation area and a breakout, and this gives us a great buying opportunity. So after identifying that, we place our entry line at our entry point, and we can also identify quickly our swing points to the left. And these are support areas that we can identify where we should place our stops. We see the risk factor, and we notice that the number of pips are changing, but the dollar amount and the risk level, most importantly, aren't changing. However, what's key is the fact that we can quickly identify the number of lots we're supposed to enter into based on our risk assessment. So as we transition, whether you're going to use a candle as your stop or you're going to use a swing point as your stop, you can quickly identify how many lots you're going to enter into in order to maintain your risk levels identified on your trading plan and the discipline necessary to succeed in the business of trading.